Hello, everybody. So, this is an update to tell you, my viewers, that today I have bought MicroStrategy and I have bought CleanSpark. I did it again, but heavy buying today. Some heavy buying because I find this price to be so cheap at just 3 days from the halving. It's really hard to believe this drop. I mean, it's not hard to believe, right? Over the weekend, some incident in the Middle East, Powell is kind of scaring everybody again, but it's like the market has now a 2 day or 3 day window and is totally forgetting about the fact that the supply of new Bitcoin gets halved on Friday. This Friday is halving day. This is going to be insane. So I did things that I don't usually on this stock, but you may know if you follow the channel a long time, I refer to my Google position as my savings account position, which is why I never cover it, and some long-term ETFs, some triple Qs. So I sold some of that, and I also may have done a little bit on margin in anticipation for my refund, which usually comes, it takes 10 days. But I usually use the federal tax system as kind of a savings account because I don't want to pay the penalty, and therefore we overpay. That's what that's what most Americans do, right? We overpay, and then we get the money back, and you get a check coming out of the sky, but it's your money really. It's just that you've overpaid, and this time I got a bigger refund than I thought. And so I'm really happy about that, which means that that money is gone into MicroStrategy and in CleanSpark. And in answering the question, which of the two do I like most? Well, it's tough to say. If you believe in signaling theory and costly signals, I would obviously need to tell you that I like MicroStrategy more because my position in MicroStrategy is quite a bit bigger than that in CleanSpark. But that's also because I built that position for a long while. CleanSpark is sort of a newer position, but not that new either. But I went heavier in MicroStrategy. Anyways, the point is, both of these companies, in my view, are dirt cheap, and the multiplier has really walked in favor of that cheapness. So let me show you this. So if I show you this is the price of Bitcoin over the same distance. So I kind of took the peak until today, end of day, and so you can see MicroStrategy is down 32% from March 25, which was the peak, until today, end of day, and CleanSpark down 38% from March 25 until April 16, again today, end of day. But Bitcoin is only down 11%, let's call it 12%. So roughly the multiplier seems to be a 3x multiplier for MicroStrategy and a 4x multiplier, roughly, right? A little less than 4x for CleanSpark. So greater leverage, greater multipliers than what I thought when I first covered it. I've covered them multiple times on the channel, but the last time I covered it, I kind of said that like my working assumption was a 2x multiplier for MicroStrategy and a 3x for a CleanSpark. Seems to be more. Now that multiplier may be exacerbated to the downside, but I don't know. It's Bitcoin. It could be also exacerbated to the upside. It's gonna take a while for the market to figure out how to value these companies. But in my view, what I believe to be true is that these companies should not be trading at one time the Bitcoin that they hold, or at one time the multiplier, because they have access to traditional finance, to legacy finance rails. They are also vehicles that can be owned by certain companies. While many companies, hedge funds, retirement funds, can't own Bitcoin outright, can't own the ETF even, they have to go through stocks. And so these stocks play an important role, in my view, in the adoption of Bitcoin and in the Bitcoin story. So I said in a prior video, this is another aspect. I said in a prior video, and this is reflecting on the volatility, right? So in a prior video, I said that MicroStrategy is no doubt a long-term hold for me. It's no doubt a long-term hold, and I plan to hold this more than 10 years. And I know some people want to nail the top. They want to sell at the top and buy back at the bottom. I don't want to do that for tax reasons. But I also know that, Bitcoin is one of these assets where you always want to be in because, well, no investment advice, right? But it's one of these assets where I always want to own because I don't know which days are going to be the 10% days, right? I don't know which day is going to have, the diamond candle, as they call it. I don't know what day that's going to come. I want to have the Bitcoin when that happens, and I especially want to have the proxies when that happens. So I have conviction to hold MicroStrategy over a very long term, and I am slowly but surely, especially as I study gold miners and how gold miners perform compared to their underlying asset, which was gold. So I'm slowly but surely growing conviction that CleanSpark will also be a long-term hold. I mean, it's a given that it's a medium-term hold. I wouldn't get rid of that stock until end of 2025. But I'm slowly but surely growing conviction also that this could be a long-term hold. And more philosophy about the movements. So of course, my accounts, especially MicroStrategy, was a big position for me. It's down 32%. And I just want to say, it doesn't faze me. Like it totally doesn't faze me anymore. And it's about knowing yourself, because Tesla, Tesla in what, 5 or 6 months, Tesla lost 35%. Well, that annoys me more, believe it or not, than a Bitcoin proxy like MicroStrategy losing 32% in, let's call it 25 days, 20 trading days. So in 20 trading days, it lost 32%. I mean, not even a sweat. Frankly, that price movement seems like a nice walk in the park. And that is because I've held this asset, Bitcoin, since 2015. My conviction in the asset is so big that it really doesn't faze me anymore. And I have found comfort in volatility. This is an asset that you got to be comfortable with volatility. Otherwise you shouldn't own it, right? You have to be very, very comfortable with that volatility. Clearly, I'm more surprised by how beaten down a company like Tesla is. Tesla, I don't believe should have that volatility. I believe Tesla is a well-run, high-performance company. We shouldn't see that volatility on that stock. In my view, it should be volatile like the QQQ, i.e. much lower. But for Bitcoin, I'm so used to it. I have this comfort. It's like I don't even care. It doesn't even faze me anymore, and that's why I bought more. It's about knowing yourself. And I sure know that some people would be quite upset to see a 32 or almost a 40% drop in 20 trading days in their asset. They'd be quite upset, but I guess I'm fine. That really doesn't faze me. So let's talk briefly about each of these assets. So MicroStrategy. So what is one of the consideration of MicroStrategy? Why I own it? Over the short term, this is a catalyst that some have started pointing out. I'm pointing it out too here. They closed the quarter, right? Q1 at quarter end. Bitcoin was trading at 71,000 when quarter end, which they will report on in a few days. That closed at 71,000. So they will likely at least recognize massive paper gains, and we'll see if they recognize some of it in a gap way or not. That's going to be the grand curiosity coming up for the quarter, but at least they will show massive paper gains. And so if the algos make any sense, the stock should print some really great profits if the algos make any sense, which frankly they don't. But anyways, and then the second thing I want to talk about, of course, is the premium went down. Much of the MicroStrategy drop can be explained by a change in the premium. So if you remember the last time I covered MicroStrategy, that premium was 100%. Today, the premium, with how much Bitcoin they hold at today's market price, right? Almost 63,000 is today's market price. That premium today is 63%. So it's a market cap of 22 billion, 13.5 billion of Bitcoin they hold. So that's a premium of 63%. That premium is slowly going back down. And that's, I would argue, that's the main reason why the stock is so volatile, is the market doesn't know what sort of a premium a company like MicroStrategy would trade out. But I can tell you, in my view, it's going to be a multiple, right? It's not going to be a multiple that begins in a 1, in my view. So, and of course, I use market cap okay, I do that, but the reason why I do that is I know they have debt. I'm fully aware they have debt. No need to say that in the comment section. But the way they secured that debt, they have some very low interest rate debt that matures in 26, another one in 29, well-laddered maturity. And don't forget, they have a business intelligence software business that they are turning into SaaS. They are moving from a license model to a subscription model, and so they're doing a profitable pivot in their main business, their core business, and sure enough, the core business can cover the interest only, right? Interest only, not principal, but the core business can cover the interest. So this is not really something that I worry about, the debt for that company, especially because, the debt hasn't been spent on useless goodwill in an acquisition with some imaginary value, or the debt hasn't been spent on buybacks, right? It's been spent on Bitcoin. It's been spent on the best asset, the highest quality asset that we've ever known. And this is a good transition to comparing, say, a MicroStrategy or a JP Morgan. So JP Morgan is trading at 1.9, let's call it 1.9 times price to book. So it's trading at 1.9 times the melting ice cube that is the US dollar, that are the bonds, right? If you have seen interest rates going up recently, right, what does that do to the bonds when interest rates go up? It's going down. So it's an absolute melting ice cube, if you ask me. I think the multiple should actually start with a zero here for a company like JP Morgan. But that's just me. I'm not the market. I'm not as smart as the market, and so, in my view, obviously, this Bitcoin, in my view, should be trading at a higher multiple than a multiple of a US dollar for a bank. And so, what should the premium be? To me, it's one. It's not a 1.5 to me. To me, right? It's maybe a 3, maybe a 4, something like that. Is probably what I look at here. So let me move on to another analogy, which is, that's a big question. It's like, why should MicroStrategy trade at a premium to how many Bitcoins there are on the balance sheet? Well, let's go back, and I've said this before in my MicroStrategy dedicated video, so I'll just repeat that quickly. Michael Saylor compares Bitcoin to the Granite under Manhattan. Michael Saylor right now, he owns about 1% of that Granite, and on that Granite, i.e. the Bitcoin that is owns, on that Granite, that layer of Granite, will be built the financial system of the future. The financial system of the internet will be built on Bitcoin, on that Granite. And it really doesn't matter if Bitcoin trades in, wrapped asset, tokenized asset on other smart contracts platform like Solana or like Ethereum. It doesn't really matter. The store of value asset is accepted as Bitcoin. And so the question is, will eventually MicroStrategy earn rent on owning 1% of all of that Granite, right? A little bit like McDonald's earn rent on the land that they own where the McDonald's stores are located. So will they earn some rent on that Granite? And if they do, right, there should be a present value of that future BTC yield. That's, in my view, the big bet of owning MicroStrategy is you're looking at something that could be a dynamic Bitcoin bank. And so, in my view, yes, there will be opportunities to earn yield on the Granite. Granite being Bitcoin, yield being rent. We don't see those opportunities today because the stigma of 2022, of the FTX collapse, is still very, very strong. And you still have very early days maximalists who are so maximalist they would never ever consider lending it. But MicroStrategy has already said that they will spend 1% of their R&D money on exploring different ideas to incorporate Bitcoin as sort of a reward system between companies and customers. They are a software development company. They're going to find something to do with that Bitcoin, in my view. And in my view, we are seeing emerging a vision of what a Bitcoin yield could look like in the future. One of them is MicroStrategy could stake the Bitcoin on a layer 2 like the Lightning Network, but there's other networks that we could easily imagine. And so you can stake that Bitcoin on layer 2 and collect transaction fees, right? Right now, the transaction fees are collected by the miners because you are transferring the Bitcoin on the mainnet. But why wouldn't you have, say, a MicroStrategy net where you can own Bitcoin through MicroStrategy and just transfer it through the MicroStrategy side chain as opposed to transferring it through the quote-unquote the mainnet. So that's how you can earn a yield. You can also learn your Bitcoin to an exchange for liquidity and earn yields on pairs. Now, obviously, the obvious pair for a company like MicroStrategy would be Bitcoin USD. That'd be the pair that they do it on. But if you're familiar with the way DEXs work, you know it's all about the pair and earning a yield on that pair. MicroStrategy can dedicate some of that Bitcoin and US dollar on the other hand as a pair to an exchange and earn yield like that, earn fees like that. Now, of course, the obvious one is you can use your, and MicroStrategy, we know they're already doing that. Michael Saylor already did that once, right? You can use your Bitcoin, you can use your Bitcoin as a collateral to buy more Bitcoin. And there's a lot of videos of the internet where he goes on and on and on and gets all excited about this idea, right? But you can also use your Bitcoin strategy, your credit worthiness. You can use, if they're back a $30 billion company, in a few weeks, you can use that to write call options, promises to buy Bitcoin. You can write that and earn money like that. That wouldn't be a BTC yield, but be a USD yield, but you can do that. And eventually, and this is long down the road, this will be what takes the most time because it's not part of the Bitcoin ethos for now, because people still have the stigma of 2008 and the stigma of the 2023 banking crisis. But eventually, at some point, I believe lending in BTC could happen. At some point, and of course, that requires an Austrian economics lens to understand what that would mean. But Bitcoin loans are possible. What it would mean is that Bitcoin loans would be very hard money loans. And by very hard, I mean they wouldn't be loans that are created through monetary printing, but they would be loans that are actual savings of, say, for example, MicroStrategy. And so that's why in an environment like this, loans would pay very high yields because, you're risking your keys. So you would require a very high yield, nosebleed yield. That's also why I believe most people won't borrow in Bitcoin as long as the traditional financial system is alive and well. As well as it can be. But that's one aspect. And then another aspect is that only the finest projects would get financed under a Bitcoin standard, but you would still have some loans. You would still have some edge cases, but lending would likely be only a fraction of the business that it is today, because all of a sudden monetary creation does not happen for lending anymore. All of a sudden, lending is going back to its original use or intent, which is you're borrowing someone else's capital to grow or accomplish something. So, is there an opportunity for yield in the future for Bitcoin and for any company owning Bitcoin? The answer to that, in my view, is yes. And in my view, this is not priced in. And considering the premium right now at 63%, I like those odds. I like this stock. Now, moving on to CleanSpark really quickly. I'm going to go quicker for CleanSpark. Talked a lot about MicroStrategy today. I love CleanSpark very much. They are hodling, right, as we say, hodling more than 8,000 Bitcoins. It's clear that they've continued hodling the Bitcoin that they mine, right? They have valuable power contracts at 4 cents per kilowatt hour. Think about those contracts. Think about all of the AI companies who would dream to pay 4 cents a kilowatt hour. CleanSpark secured that before AI was a thing, and they also own valuable miners, so they got a 30% discount on buying an option to buy miners from Bitmain at a really good price, and those miners are going to be delivered throughout 24 and early 25, but they also own their current miners. And miners trade in line with Bitcoin. The more Bitcoin becomes valuable, the more miners are valuable. So it's kind of like your tool of production, right? Your Bitcoin excavator, to use a mining analogy, your Bitcoin excavator, your mining rig becomes much more valuable when the price of Bitcoin goes up. This is not something you necessarily see in, say, a regular gold miner, where their excavator are not really movable and interchangeable that easily, right? That's not true for a Bitcoin miner. Bitcoin miners can easily move from one location to another. And so what happens is, even if, for example, a Bitcoin miner held by CleanSpark stop being profitable because they pay 4 cents a kilowatt hour, well, guess what? You have a lot of sovereign nations who pay 0. So an old Bitcoin miner makes no sense for CleanSpark, but makes sense for somebody who pays 0 for electricity. So that's another consideration. Anyways, if you wanna get the backstory behind this math, I suggest you watch this video. It's on my channel. That was about 10 days ago, I believe. But I tried to have some fun and project how much they would mine in 2025 each month, taking into account the halving, i.e. mining twice as little Bitcoin after, well, this Friday, I suppose, after the 19th. And also I took into consideration the increase and subsequent slight decrease in the difficulty that happens typically after a few months. So it's kind of a double-edged sword. They will mine many less Bitcoins, but they can expect a small drop in the difficulty, leading them to mine a little more Bitcoin. Anyways, in this video, I go through the detail, and I get to about 8,664 Bitcoins for the full year of 2025. That's what they would mine, and the average cost to mine it is $28,000 per Bitcoin. And I'm going to assume that the transaction fees and their current cash on the balance sheet covers the cost of operations for the sake of simplicity. So mining this would be $242 million of electricity, mostly electricity, some labor, mostly electricity. I'm assuming that's going to be covered by the transaction fees and the cash on the balance sheet. It's not that far-fetched. At peak of excitement in the Bitcoin space, we've had days where transaction fees are actually higher than your Bitcoin mining. So, not that far-fetched. Anyways, this is where it gets interesting. So assuming Bitcoin stays at 62,000, the enterprise value today is 3.25. So you're paying 6 times the Bitcoin that will be produced in full year 2025. You're paying 6 times that today at that price. So that's already dirt cheap. It's already trading like a mall that's about to go out of business. But we're going to have the halving, right? So the halving is what? It's a theoretical 2x. That's what the halving does. You cut the supply of new Bitcoin in half. So theoretically, and I'm not saying that will happen right away, but over the longer run, theoretically, twice as little supply, demand stays the same. Theoretically, you get a 2x, right? Well, in that case, that's trading at 3 times, right? 3 times 2025 Bitcoin earnings, okay, and so on. And if you imagine a Bitcoin at, say, 250, you have a stock that's trading at 1.5 times 2025 earnings. I believe this is heavily undervalued, knowing that the average S&P forward ratio, the forward price to earnings ratio on average on the S&P 500 stock is 23. So any of these numbers seems like it is highly undervalued to me. Like I said, it's a problem of the market. In my view, the market does not understand Bitcoin and certainly does not understand these companies just yet. We are just at the beginning of this revolution in my view. And of course, take it with a grain of salt. I'm obviously biased. I've been into the space since 2015, and I was one of the early sellers of Bitcoin. I made the mistake of selling it at $250 a share, and so now you probably understand why this guy doesn't sell. He buys and he doesn't sell anymore, because when you sell a bunch of Bitcoin at $250 a share and you see it at 62,000, it doesn't feel too good. And so the point is, my belief in Bitcoin is very strong. I like this asset a lot. To me, it's all about Bitcoin, nothing about bonds. I don't want to own bonds. I want to own Bitcoin. Bitcoin has a hard cap of 21 million. Every time a key is lost, you reduce the supply of Bitcoin. You make the Bitcoin more valuable for everybody, right? With Bitcoin, you can imagine a world where inheritance doesn't exist because people willingly decide to die with their keys and donate back to the network by reducing the supply. It's virtuous. The system is virtuous at its core. It is built to be virtuous, right? Bonds are just contracts to receive more of dollars, more of that melting ice in the future. That's all it is. There is no hard cap on how much of that melting ice will be in the future. And that's why when you look at the performance, and it's kind of like a mic drop moment, I suppose, but if you look at the performance from 2015 to 2024, look at the Vanguard Total Bond ETF, the performance 1.25% each year for the past, let's call it 9 years. Bitcoin, 70% each year for the past, let's call it 9 years. Absolutely outstanding asset. The one certainty that we have is that more money will be printed. You have seen recently the Biden plan for $7.3 trillion budget. That's what he's going to be pitching during the campaign. A $7.3 trillion spending budget, right? So what do you think is going to do to the money supply? It's going to be insane. You can't find enough money in the system to tax that, right? Once you start taxing something, people are going to do things differently, right? People are going to do things differently. So you can't find that money, right? People move. The path to me is clear, is Bitcoin. It's hard assets. It's the hardest asset, Bitcoin is. Houses and gold, they're both pretty hard assets, but there's a much harder asset out there, and it's Bitcoin, and it's because it's the algorithm, and I'm happy to own it. So anyways, this was not investment advice, not financial advice, just entertainment. Hoping you were entertained. I appreciate your likes. I appreciate your subscribes. I appreciate if you follow me on X. Thank you for watching and have a wonderful day.